January 2026, Dubai recorded its highest sales per month as it was 72.6 billion dirhams in a single month. And by the end of the quarter one, it registered around 172 billion dirham sales in real estate. And by the end of quarter one, it registered 176.2 billion dirhams in property value. That's a 23% rise year on year. So why is serious investor suddenly looking after Dubai? And more importantly, should you be paying attention on it? So now I'm going to break down what's currently working in the real estate, where to buy, what to buy, how the legal stuff actually works, and the risk that nobody else is letting you know. And by the end of this video, I'm going to give you a clear framework of what kind of investor you are. Before we talk about locations and prices of the real estate, you need to understand why this market is moving so fluently. IMF, International Monetary Fund, just projected that in 2025, Dubai's GDP growth was 5%. The IMF, International Monetary Fund, projected around 5% growth of GDP in 2026. That's the best in all of the GCC. Dubai's population just crossed 4 million in 2025, and it's predicted that more 2.5 million or more residents are going to come in 2026. That's not a small number. That's a city adding more people than many mid-sized towns every single year. And here's what's interesting about the current phase. A lot of people think Dubai real estate is still speculative. It's not. Experts now describe this as market maturity. Transaction value is outpacing transaction volume, which means prices are going up because of the product is genuinely very good, not because people are panic buying because of the hype. Experts now describe this as market maturity. Transaction value is outpacing transaction volume, which means prices are going up because the product is genuinely good, not because people are panic buying on hype. Now the thing that gets international investors really excited is the tax structure. Dubai has zero property tax, zero income tax, and zero capital gain tax. If you are coming from UK, India, Canada, or the US, wrap your head around what that does to your net yield. One important caveat: your home country's tax rules may still apply to you on income earned abroad. Always check with a tax advisor in your country, but from Dubai's side, the structure is clean. And here's the scale of what happened in the last 5 years. Dubai has crossed 82 trillion in total property transactions. Trillion. That's not a market you can miss. Before we go any further, I want to introduce a framework where we're going to use for the rest of this video. There are 3 types of investors in the Dubai market right now. Type 1, the yield hunter. This person wants rental income, passive cash flow, and entry point that doesn't require betting the house. They want to buy something, rent it out, and see real returns hitting their account. Type 2, the capital gains player. This person is thinking long. They want to buy something today that's worth significantly more in 5 to 7 years. They are comfortable with off-plan, they are patient, they are playing appreciation. Type 3, the lifestyle and residential investor. This person wants to actually live there, or wants the golden visa, or is thinking about the relocating the family. The financial return matters, but the lifestyle and the visa are part of the value equation. Every section from here is going to tag which type it's most relevant for, so you know what to pay attention to and what you can skip. Figure out which one you are. Most people are combination of 2, and that's fine. Let's talk about what's actually available and what the numbers look like. Apartments led the market in quarter 1 2026. 36,400 transactions, AED 75 billion total apartments were sold. Lower prices point, faster liquidity, easier to rent out. Villas clocked AED 60 billion, up by 17% year on year, and the forecast has villas outperforming apartments in 2026 with expected appreciation of around 18%. Commercial property had the biggest jump though in any category, 70% surge in value. The office market specifically is dealing with intense demand and almost no new supply coming. That gap is pushing both capital values and the rental yields. Now, the big decision most buyers face is off-plan versus ready. Off-plan means you are buying something that hasn't been built yet. You pay in stages, usually on a developer payment plan. The upside is you lock in today's price and the property is worth more by handover. The downside is you can't generate rental income immediately. Ready to move is exactly what it sounds. You buy, you rent it, or move it. Cash flow starts immediately. Off-plan is currently 70% of total transaction volume in Dubai. That tells you where the market's confidence sits. A couple of newer formats worth knowing about briefly: branded residencies, which are apartments or villas tied to luxury hotel brands, and tokenized or fractional ownership, where you can buy a fraction of a property for much lower entry. Both are growing. We might do a dedicated video on those. Who should watch this section most carefully? Yield hunters are those who are searching apartments in established areas. Capital gain players are those who are searching for off-plan and villas. Lifestyle investors are those who are interested in buying branded residences and waterfront products. Location is everything. Here's the cheat sheet. I'm going to split this in 3 tiers. Tier 1 is established prime areas, Tier 2 is high-yield mid-market, and Tier 3 is emerging growth corridors. Tier 1, established prime downtown Dubai, Dubai Marina, Palm Jumeirah, Business Bay. These areas are well known globally. Prices are high, yields are lower than the mid-market, typically 4 to 6%, but the product holds value, attracts quality tenants, and is the easiest to resell. If you want something you can point to on a map and everyone knows what it is, this is the tier. Tier 2, high yield mid-market. This is where the yield hunters should be spending most of their time. Jumeirah Village Circle or JVC is a standout right now. The rental yields in JVC is around 7 to 9%. The location is central, amenities are established, and the price points are accessible. If your primary goal is to cash flow, this area comes up again and again. Dubai Marina, Palm Jumeirah, Downtown, and Dubai Hills Estate also make the list of strong performers offering both appreciation and rental income, but they sit higher on the price spectrum. Tier 3, emerging growth corridors. This is for the capital gains player with a 5-year plus horizon. Dubai Silicon Oasis is one to watch out for. The new Metro Blue Line improves connectivity significantly, and the analysts expect 6 to 8% capital gains as the infrastructure comes online. MBR City, Mohammed bin Rashid City, is positioned as an urban resort destination. Lagoon living close to downtown. Demand for that format is growing very fast. Palm Jebel Ali is a long horizon play for high net worth buyers. It's the next big Palm. Prices are lower than Palm Jumeirah today. The question is patience. Expo City Dubai is turning into a genuine corporate hub that drives both short-term service apartment demand and long-term rentals. And Dubai South, especially around Al Maktoum International Airport. It is in line for major infrastructure investment as the airport expansion accelerates. There are over 60 designated freehold areas. The major ones include downtown Dubai, Dubai Marina, Palm Jumeirah, JVC, Business Bay, and Dubai Hills Estate. If you are looking at a property and you want to check if it's in a freehold zone, it's a quick verification with the Dubai Land Department. Now let me tell you freehold versus leasehold. Freehold means you own the property outright, including the land. Leasehold means you own it for a fixed term, typically 99 years. For most international buyers, you want freehold. The rights are cleaner, transaction cost. Be clear on this before you buy. The Dubai Land Department transfer fee is 4% of the purchase price. That's the big one. On top of that, property registration fees are AED 2000 for properties below AED 5 lakh and AED 4000 above that. Real estate agency Fees are typically 2% plus 5% VAT. Now let me tell you what all documents you need. A valid passport, signed sales and purchase agreement called the SPA, a no objection certificate from the developer, and the title deed on completion. Offline buyer protection. One thing that makes Dubai's off-plan market safer than most people assume. RERA, the Real Estate Regulatory Agency, requires developers to hold buyer fund in an escrow account. The developer can only draw down in stages tied to construction milestones. So your money isn't just sitting with the developer to use it however they want. There's a regulatory oversight. So your money isn't just sitting with the developer to use however they want. There is a regulatory oversight to it. Let's talk money now. If you are a non-resident buying in Dubai, you can get a mortgage, but the maximum loan to value ratio for non-residents is 50%. Meaning, if you are buying a AED 2 million property, you put in 1 million dirhams. The bank funds the other 1 million dirhams. UAE residents get better terms, up to 75 to 80% LTV. So if you are already living in the UAE, your down payment requirement drops significantly. Interest rates for non-residents currently run between 5% and 6.5%. Not cheap, but not shocking for an international mortgage either. This is where a lot of capital gain players work their strategy. Developers offer structured payment plans. The common formats are 10-90, where you pay 10% now and 90% on handover, or 20-80, or post-handover payment plans, where part of the balance is paid in installments after you receive the property. What this means in practice, you can lock in a property at today's price with a fraction of the full capital. If the property appreciates during construction, you made returns on a much larger base. The common formats are 60-40, where you pay 20% as a down payment and rest you get a payment plan till handover, or 20-80 or post-handover payment plans, where part of the balance is paid in installments after you receive the property. What this means in practice, you can lock in a property at today's price with a fraction of the full capital. If the property appreciates during construction, you made returns on a much larger base than you actually deployed. That's the leverage logic. Some investors, especially those looking at multiple properties or wanting to pass assets to family, structure their purchases through a corporate entity. There are potential tax advantages in the certain jurisdictions and estate planning benefits. This is worth a conversation with a UAE corporate lawyer before you buy. Golden Visa entry point. If the Golden Visa is part of your goal, the minimum property value you need is 82 million. We'll cover the full Golden Visa section next. But now a financing perspective, know this. Even a mortgage property can qualify for the Golden Visa. Now let us talk about the perks of the Golden Visa. This section changes everything for a lot of people watching. Dubai's Golden Visa gives you a 10-year UAE residency visa. Here's the part most people don't realize. There is no minimum stay requirement. You can live anywhere around the world and your UAE residency remains valid for the full 10-year term. You get the residency without being required to be there. Yes, off-plan qualifies too. If you buy an off-plan unit valued at 82 million or more from approved developers like Imar, Nakhil, Damak or Shoba, you can apply for a Golden Visa once you receive your Uqud certificate. The Uqud certificate is issued when the developer registers your purchase with the DLD. The property doesn't need to be built yet. As of April 2026, Dubai also removed the minimum property value requirement for a 2-year property investor visa. If you are a sole owner of any property in Dubai registered in your name, you now qualify for this residency regardless of property's value. This is much more accessible entry point for people who want UAE residency without hitting a 2 million threshold. One critical thing you need to know, this is important and often missed. If you pass away without a registered will in the UAE, your Dubai property may be distributed according to Sharia law. That could mean it doesn't go out to who you intended. The fix is simple. Register a will with the DIFC Wills Service Center. It ensures your Dubai property is distributed exactly according to your instructions. If you are buying a property in Dubai, this should be on your checklist. Residential rental growth is forecast to stabilize at 0% this year. Not decline, but flat. Rates have been rising fast and they are approaching market ceilings in many areas. At the same time, there's an estimated around 135,000 new units are entering the supply pipeline. That's a record number in specific segments and specific areas. Oversupply is a real risk. Do your research on the specific area you are buying, not just Dubai as a whole. JVC and Dubai South are different markets. Treat them that way. Developer due diligence. Not all developers are equal. Before you put money into an off-plan project, verify the developer's RERA registration. Check that the escrow account is in place and look at their track record on past projects. Delays might happen. Some developers have better delivery records than others. This is public information. Use it. The golden visa title deed trap. Here's something that catches people off guard. Even if your property has appreciated and is now worth over 2 million dirhams in the current market, you won't qualify for the golden visa if the original purchase price or your title deed was lower. The qualifying value is the title deed value, not the market value. So if you bought your property in 1.5 million and it's now worth 2.5 million, you still don't qualify. If the golden visa is your goal, buy at AED 2 million or above from day one. There is currency risk as well. The AED is pegged to the US dollar. So if your home currency is US dollar, no issue. If you are earning in pounds, Indian rupees or other currency, you have exposure to exchange rate movements. Not a deal breaker, but it's a real variable in your return calculations. Property management realty. Short-term rentals require a specific license through DTCM. Dubai's Tourism Authority. Long-term rentals are simpler to manage but have their own rules around tenants. If you are not based in Dubai, you'll need a property management company. Factor that cost in too. Typically, they charge around 8 to 12% of your rental income. Dubai is a liquid market compared to most emerging markets, but selling still takes time. Realistically, budget 3 to 6 months to exit a property at a fair price. If you need to sell fast, you are likely taking a discount. A few trends worth knowing before you make your call. Green buildings going mainstream. Dubai's Supreme Council of Energy forecast a 20% rise in solar-powered residential projects this year. ESG features and green building certifications aren't just luxury plays anymore. They are reaching the mid-market. Properties with green credentials are attracting premier tenants and stronger resale demand, worth weighing in your buying criteria. Lifestyle communities are surging. The Mark Lagoon saw a huge 186% surge in the property views. That's a massive signal. Buyers, especially families, are moving towards villa communities with water features, green spaces, and resort-style amenities. The suburban lifestyle play is accelerating though. This lines up with villa appreciation forecast we talked about earlier. Alright, let's bring it back to you. We said at the start that there are 3 types of investors. Here's what I'd tell each of them right now. The yield hunter. Budget range for you starts from around 5 100,000 dirhams to 1.5 million dirhams. Your best move is a ready apartment in JVC or Dubai Silicon Oasis. You get in at a reasonable price point. Rental yields you'll earn is around 7 to 9%. Don't overcomplicate it. Buy in a proven rental area. Get a good property manager and let it run. The capital gains player. Budget range for you is 1 million to 3 million dirhams. Your move is an off-plan villa in an emerging corridor with a post-handover payment plan. MBR City, Dubai South, Palm Jebel Ali. These are your locations. Buy at today's price, structure your payments over construction and exit it or after handover when the premium is baked in. Your timeline is 5 to 7 years minimum. If you are not patient, this isn't your strategy. The lifestyle and residential investor. Budget is around 2 million and up. Buy a ready mid-market unit in a freehold zone. File your golden visa paperwork immediately after the title deed registration. You get the residency, you get the asset, you get the optionality of actually living there or renting it out while you are not, and register your will with the DIFC. Look, Dubai is not a magic machine. There are real risks here, and I've tried to be honest about all of them. Oversupply in certain segments, cooling rental growth, developer risk, all off plan. All of it is real, but the fundamentals are strong. Population growth, tax structure, investment, infrastructure investment, regulatory maturity. This market has earned serious attention. Figure out which type of investor are you, pick the right area or the right type, do your developer due diligence, get proper legal and tax advice in your home country as well. So if you find this video helpful for your purchase in Dubai, please subscribe my channel and we'll share more videos to you.